Greetings, members, one and all of the Salivation Nation. Gold, the anti-investment. Let's explore. Surely you have heard many people refer to gold as an investment. And I'm sure you don't want me to call you Shirley, but nonetheless, that is something we hear all the time. People refer to buying any kind of asset class, stock, bond, and they use that term interchangeably with everything, any kind of commodity. Yes, gold is a commodity, but it is also a monetary metal. The most important thing to know about gold, in the form that you see it before you here, is that it is not an investment. For those familiar with this channel, you know that I don't like to refer to gold as an investment, and I've posted a video on why gold, and yes, silver as well, should not be seen as an investment. Gold can actually play a role in an investment strategy. There's no question about that. You've heard me talk about that as well, and you will continue to hear me talk about that in the future. But regardless, in physical form, we should not put the metal in a category for which it does not belong. Gold is not an investment. In fact, it is the exact opposite of it. And that's what we're going to talk about here in the coming moments. What is gold? Gold is a metal that has been used as money for decorations and other uses, and it has been valued as a store of wealth. A safe haven for wealth, essentially, if you will, for thousands of years. In reality, that has not changed. Those properties hold true today, just as they held true thousands of years ago. That's what makes gold so attractive. Whenever you buy an ounce of gold, yes, it is based off of the spot price. That's the money you put forward. Money, as I refer to it, as this kind of money, the dollar bill. You've also heard me refer to gold as money, and also this currency, this note, this debt instrument here that you are looking at is indeed money as well, because it is a store of value too. But what's the difference between this form of money and that form of money? Well, the difference is that one is a depreciating asset. The dollar, by design, loses value by 2% each year. That's the Federal Reserve's target of loss for this depreciating asset, this debt instrument. This asset does not appreciate, but it maintains its value, and that's extremely important. That's what makes it so attractive. A maintain of a store of value, even through the fluctuations of price measured in these. That's right, these dollar bills. Now, one of these notes and coins or metal here is a store of value that increases or maintains its value. The other one loses value, and there is a difference, obviously, between these two, and what they are similar in terms of recognized and liquid between different parties, but also between central banks, especially considering that since April of 2019, gold has been referred to as the tier 1 asset, equal or on par with the dollar and currencies. But the other difference between these two things, the dollar and gold, is that one is considered sound money, and the other one is considered the ghost of money. Indeed, the money, still it may be, it is essentially the ghost because it's paper, and it devalues because the Federal Reserve on target has set that at 2% loss of value each year. As I record this video, we are in the midst of inflation, and that inflation has moved up to close to 7% as I record this video, which means that the dollar is losing more than what the Federal Reserve would like, and at the rate of that loss and the purchasing power is diminishing. The purchasing power of gold really is constant. However, there is price fluctuations, and that is recognized where gold will go up and down in price. But as I mentioned before, price and value are two different things. You see, sound money maintains its value. The money of the unsound does not. It depreciates in value. We have a healthy respect for these dollar bills because we use them for transactions. But I also have a healthy respect for gold and see it for what it is, the anti-investment. So important to understand, because what is an investment? Let's define the word. What is the best definition of it? Well, it's a item or thing or some sort of entity that is a purchase that is completed with money that has the potential to produce income or profit. So when you invest, you are engaged in the act of putting forth capital from the expectation of income or profit. Now, you tell me, whenever you purchase gold, yes, you could technically profit from it, but what does it mean to profit if you lose your soul? So the Bible says. And what about the soul of the dollar bill? Because let's say that this dollar is depreciating at a rate of 2% per year, on target with what the Fed would like to happen, what's designed, and gold goes up in price 2% a year. Well, it's countering the dollar. It's maintaining its value. Even though the price has gone up, one could make the argument that you could profit from that 2% per year. And by the way, that means that profit would include the premiums you pay for these physical entities in the form of coins, rounds, or bars. So that is the difference. People say, well, yes, it's an investment because you can make money on gold. But making money does not mean you're preserving your wealth. It does not mean that you're getting ahead, because you have to think about inflation. And by the way, if you buy a certain amount of gold for under the allotted amount to be exempt from taxation in any given state, well, you've got a tougher road to haul, because not only do you have premiums, but you also have taxes that you must pay. So therefore, it's, I think, more realistic to look at gold in the physical form as a store of wealth. And by the way, it's not just a store of wealth over the course of any small given amount of time, even if that amount of time is 1 or even 2 years. Because when investments are things that you hold until you can make money on them. That's not how you should view gold. I don't believe that's a healthy way to hedge with gold or to invest in gold, waiting for returns and then selling them, because like silver, gold does have the burden of ownership. In other words, when you buy and you pay a premium for gold and then you go to sell that gold, you are going to be losing out on the premium of the gold that you bought, which means that you probably won't get ahead. Now, it just depends on when you buy and timing it in such a way to be able to make good on it. You know, you can invest in coins, and but timing that market is very difficult too. You know, that's called flipping, essentially. That's what they call it, especially for modern coins. But even classic coins that have somewhat of a numismatic value, you can certainly watch that market, and it could be an investment that could potentially be fruitful. But the metal itself, most gold that you see out there, the vast majority of the price of it is, or the vast majority of the value of it is tied up in the spot price performance over the course of a long enough period of time. So that's why I believe it's a lot less worry to think about it as a hedge, as a store of value, as a wealth preservation tool, than as an investment. And, you know, because the price does move, it does fluctuate. And that means when you buy it, And unlike other investments that you unload at just the right time, you're not stressed about what time to unload because you're not selling when the price is low. And I hope you wouldn't even sell if the price goes up, because these markets are quite volatile, and gold has been fairly volatile over the past couple of years. But this video, I believe, should stand the test of time no matter what kind of market we live in. And so therefore, it is incumbent upon us as we purchase gold to commit to it as that store of value, with the emphasis on the word store. Investments aren't something that you just store. Now, likely, when you put in your 401k or your retirement plan, those are investments. You hope to make money on those. They're relatively conservative estimates over the long course of time. But again, they are designed to make you money, and more so than the rate of inflation. Of course, in this day and age, that's much tougher to do for most investments. The stock market, we know, is propped up mainly by bond buying from the Federal Reserve, and many of us feel that the stock market is artificially high. Do we trust the stock market? Something that's been around for a measured amount of time, that's done well. It's seen all-time highs in recent months and within the last year, in spite of all that's gone on. To me, that seems like an artificial market as an investment. To me, I like the safety of a safe haven hedge. What is that hedge? The ultimate hedge against economic instability, with inflation and deflation, and just uncertainty round and round. That is gold. Gold, the anti-investment. Gold, the ultimate store of wealth. Gold that has stood the test of time. Gold that has value that transcends price. Gold that is beautiful to look at and adore. Gold, something we don't worship, but we can certainly admire. Gold, something that will protect us from times of uncertainty, from times of great prosperity. Either way, I believe gold will do what it has always done. It sells itself as a store of value. And I believe that will be the case long after these current times that we live in. Long after the next shiny object that comes along that people gravitate towards, whether it be in these penny stocks, high value cryptocurrencies, and the like. Those shiny objects that are on a digitized screen, for me, I prefer these kind of shiny objects. Gold. So there you have it. In closing, I want to just say again that yes, there's no problem with people investing their money in different things. And I've mentioned before how gold can be one of those things that you can utilize as a catalyst for investment. Same thing with silver and other commodities. But the metal itself, I believe, as part of your diversification portfolio, it's good to have some of the physical on hand to be able to preserve your wealth over time. So there you have it. I hope you enjoyed this video. Let me know what your thoughts are in the comment section below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.